Looking ahead to 2024, our next guest picks Delta as her best idea in the airline sector, saying it's set to differentiate itself from its peers. Helane Becker, TD Cowen airline analyst, joins us this morning. Helane has a buy on Delta, price target of 49. It's great to see you again, Helane. You lay out a bunch of optimistic reasons to like the stock, but it seems like international and corporate are where you say there's really more room to run.
Exactly so. Hi, Carl. Hope all is well with you. That's what we're thinking, that Delta has a really good opportunity to grow its international business. They're going to grow in the Atlantic by about 6%, and they have quite a lot of good opportunity to hook up with their alliance partners, their SkyTeam alliance partners, Air France, KLM, and Virgin Atlantic. So that gives them exposure really from France, Amsterdam, and London, almost the rest of the world that maybe people couldn't access from the U.S. And then on the on corporate, so here's how we think about corporate. Air quotes around everybody talks about corporate not coming back, but pragmatically, the U.S. economy has grown quite a lot in the past 4 years. And so what managed travel will come back has come back. What really hasn't come back that I think people are forgetting is that one-day trip. And eventually, when people can trust the industry again, it will come back.
It sounds like that's where you think loyalty may fold in, yeah?
Exactly. Delta has already a very good group of loyal customers. And as the American Express card becomes accepted in more locations, we think they'll be able to pick up additional credit card holders. And it's proven by really all the airlines that if you have a credit card, you're more loyal.
So what's with the stocks, Helane? I mean, they're barely up year to date. They haven't been that great. I guess there are worries about demand continuing and whether we've seen the bulk of it, especially if we're heading into a slower period or even a recession. They've got high debt loads coming out of COVID and high interest rates. I mean, these are just some of the bare reasons against your call, right?
Yeah, those are really good bare reasons, too. Thanks, Sarah, for pointing them out. So here's how we think about that. To your point, as it relates to Delta specifically, our view is that Delta is actually in a pretty good place with respect to its balance sheet. Its goal is to get net debt down to $15 billion, which would make it among the best of the big four airlines, maybe second to Southwest. And then getting back investment-grade credit, which would mean their borrowing costs would be more attractive. They're one notch below IG right now, so that's something that would be a catalyst for the shares next year. And then the other points that you make with respect to a potential recession, our view is that we've seen the decline in domestic. It's not growing as fast as it had been, and fares are already off their highs, which were unsustainable anyway. And we think that in the Atlantic, certainly, airfares next summer will be lower than they were this summer, not because the U.S. airlines are growing that much, but because the European airlines, which undergrew in 2023, are now upping their capacity. So it's better for Delta to do that expansion. It's mid-single digits at 6%, and allow their partners to grow with their own metal. Delta still gets the benefit of their joint venture.